and welcome to this month's installment of your Daily Five. I am Michelle Schneider, aka Mish, and I'm going to walk you through 10 minutes of information about the instrument that has been lagging in the market in terms of the four indices, and that is the Dow Jones Industrial Average. And that is going to be looking, first of all, at the symbol of DIA. Now, what fascinates me about the Dow is that people don't consider it to be a very important index, certainly not as compared to, say, the Russell 2000 or the S&P 500 or even the NASDAQ. But I find that it has good information, and that's what I want to share with you. I'm going to show you some charts on why it's lagging, and then what I would have to do to get that excuse me, what it would have to do, not what I would have to do to get that to start playing catch up, and why it's important for the overall health of the market. You might be hearing things about the market breadth showing levels of weakness while you're seeing NASDAQ make new highs. And this is definitely an area to be very, very wary of, as well as transportation, as you know, I've talked to you about so many times. So what's interesting about the DIA is that, first of all, it's 30 large cap stocks. All of them are within the United States. In terms of the baskets itself, 21.10% is made up of technology, 17.21% healthcare, and then 17% industrials and 17% consumer cyclicals. So you can see that this really gives you a very strong reflection of what's happening in the economy in the United States. Healthcare apart, certainly different technology than the NASDAQ technology, and of course industrials and consumer cyclicals is extremely important to the whole picture as we start looking at where GDP is going. So here are the symbols I'm going to cover, and I'm not going to go through them to waste time, but you can see I tried to pick a cross section of instruments for you. So let's move to the charts. Okay, so let's start with the Dow, DIA itself. And you know, I like to look at three things, not only the price action, but the real motion, which is the momentum, and then the leadership, which is basically how it is performing compared to the benchmark. So if we go first to price, we can see that it actually did get over the 50 after lagging. And this, by the way, is while I said before, NASDAQ is making new all-time highs. So right now, as of last week, we managed to confirm back into a bullish phase, but now we're seeing it having a little bit of trouble as I'm talking to you today. And of course, if you take a look at the momentum, even though this cleared the 50 up here, we never even got close to the 50 here, nor did we even get through the Bollinger Band or the dotted line. And of course, the leadership is really weak in terms of compared to the benchmark. It's actually really well underperforming. So what's the anomaly? Is the anomaly that it's in here over the 50? With a declining momentum, or is momentum going to pick up? And what's really good to judge on this is the 50-day moving average, which comes in at 341.53. So 341.53 is what you really want to look for to hold up as we go through a quiet week, most likely with jobs report at the end of the week, and of course a long weekend coming up. So this is a good benchmark for you to keep in mind before you get overly bullish in any particular instrument, because if this sells off along with the other aspects of the modern family, I think that we'll start to see some issues even with the NASDAQ stocks. Now, one of the financials I thought we would look at is Goldman Sachs, because Goldman Sachs coming into Monday when I'm talking to you, not only managed to confirm the bullish phase, but it had an inside day. And now you can see we're not necessarily inside the day from Friday, but we are still inside the candle from last Thursday. So 362.78 to 370.88 is really the range. And it's a big range, but when you're talking about this high price of a stock, that's not so crazy. However, once again, we have nowhere near the momentum that we need to give us confidence that Goldman Sachs is going to go much higher from here, especially if the rest of the market starts to falter. And if anything, if it breaks down under the 200, that's weak. Also, you can see not as bad as what we saw in the DIA, but still very much underperforming the benchmark. So what would make us change our mind in Goldman Sachs? I would say at this point, if it takes out this 371, and then of course you can use that 50-day moving average. Otherwise, otherwise, I'd be very interested more for information than for trading it. And then, talk about the ultimate cyclical here. This is Boeing. And even with good news on Boeing getting a 200 plane order that I read over the weekend, what we're seeing right here now is that this is coming off and touching the 200, which is actually slightly negative slope. So we're seeing some weakness here. And even though it made a little bit of a grand attempt to get through the 50 last week on the real motion, it's now breaking down under the 200. And you can see that it's waning in leadership. Now, this doesn't necessarily mean bearish, but what this does mean that at least for this coming week, unless these pictures change and we start to see some strength, particularly in the industrials and in the financial sector, we could be running into some trouble and maybe even a little bit of a correction as we head towards the long weekend. Now, the next one is CRM, Salesforce, which is one of the largest employers, particularly in California. And they had actually earnings recently, which is why they got this nice move up. But if you look at the moving averages here, we have the 200 above the 50, which means that this is an accumulation phase, not a bullish phase, because we want to see the 50 over the 200. It looks like we could get into a golden cross. And obviously you can see that we have some good resistance up here between 248 and 250. So what we might want to look at here, this is definitely stronger than the others. You can see that not only are we okay in momentum and we're above the Bollinger Band, we're not above the 200 though, but we are starting to see a little lag time here in terms of leadership. So what I would say is if we can get through 250, new life in this one. But if it breaks down under 240, then I probably would be patient to see if we can get a move closer to 231. And again, what this information is telling us is even though Salesforce, which is tech, is doing better, it still has some work it has to do to try to pull that Dow Jones Industrial Average higher. The next one is Amgen. Again, this is now healthcare, and Amgen is actually tried to break the 50 as I'm talking to you today on a negative slope 50, by the way. So it would be a weak phase change if it happened. But nonetheless, you can see that's resistance as it completely also ran up to the resistance of the 50-day moving average in momentum. This means there's no divergence. So this gives it a clean chart with a little bit of showing here of some leadership. So this to me is very simple. Of all the ones I've shown you so far, healthcare and biotech, even though it's part of the Dow Jones Industrial Average, is doing better. So what we want to see now, at least, is for a couple of closes. And I would say to be safe, I'd look for something over 245.50. If we close over 245.50 and momentum continues, then you can use, say, the low of today or around 243 to see if you can get a push back up to 250 and higher. So Amgen is one I would certainly keep on the list. Next one is Home Depot. Again, this is the ultimate consumer discretionary. Home Depot's come off a lot, considering we're in the summer season. The fact that it's still trading under the 50 is somewhat disappointing. You could see the momentum hasn't really done anything either, although it's sort of in line with the leadership. So this too makes this very easy. If seasonally this can get through 317 for 2 closes in a row, then I would say you would have an opportunity to see if this thing can go back and touch around the highs here up around 335 to 340. Again, we want to see some leadership there. So you can keep Home Depot on your list as well. Now, McDonald's also looked like it was going to take out the 50, now is below the 50. And again, you can see the momentum is weak, and this is definitely declining in leadership. What's interesting about McDonald's is, again, with summer season and reopening, people may be looking at better dining options, but nonetheless, this is good information to show us here that we've got not break down under this 230 or McDonald's in trouble. And the last one I want to show you is IBM, because IBM here has a nice upward slope on the 50-day moving average and is holding it, but momentum is not in line and the leadership is starting to wane. So I think the final basic blow might be for the whole Dow Industrial Average to get back into a caution phase and create some havoc in the rest of the market is if this winds up closing underneath this 144.47 for a couple of days in a row, then I would not be surprised to see a move back down to around 35. So the moral of the story is, before you get too bullish, particularly in a holiday week with a lot of information out there and a lot of uncertainty. Keep your eye on the Dow Jones and these top stocks for some idea of how the inside economic factors are looking. Thanks so much. You all have a great day. Bye for now.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.